So we're going to take a look at the rest of the Section A questions from the 7127-2 paper from June 2021. First question here for 3 marks, describe one disadvantage of a standard costing system. Well, the main one with that is that the standard, so the standard amount of materials, standard price for materials, standard number of hours and the standard labour rate can quickly become out of date. So once it does become out of date, calculating the variances becomes a bit futile, isn't it's going to throw up variances, usually adverse. So that is one issue with it. Another issue with it is the cost of maintaining it. It's quite expensive to gather all the data and then conduct all the variance analysis as time goes on. And the other problem with it is it doesn't build in any incentives for improvement. So, if people are quite happy with the standard and the variances are within some sort of tolerance level, then there's no incentive really to improve things. So hopefully that's given you some ideas. I'm sure you can look at the mark scheme and see a few more. Right, the second question then, B Limited. This is one about absorption costing. So B Limited started in business on the 1st of January 2021 and provided the following information for January 21 and February 2021. So this is one where there is no opening inventory because we started in business. So on the 1st of January, there won't be any opening inventory. We've got some sales figures and some production figures here. So you can see there's a difference. In January, we produced 5,100 units and only sold 4,500. So there would have been 600 units in stock at the start of February, where we made another 4,800 units, so 5,400 units in total. And we sold 4,900 units. The selling price is £19 a unit, and the direct or variable cost per unit are £6. Budgeted fixed production overheads of £22,000 a month are absorbed on the basis of budgeted output of 5,000 units per month. So the overhead absorbed, £22,000 divided by 5,000 units. Let's work out the amount per unit. £4.40 per unit. So what it's asking us to do here is calculate the total production cost per unit using absorption costing. So we need to take the direct costs of, what's the direct cost? £6 per unit up here, plus the overheads that we've absorbed, which is £4.40 per unit. So the total production cost is £10.40. Okay, so only 1 mark for that one. But let's have a look at part 2 and see what they would like us to do there. So part 2 is to prepare an income statement using absorption costing for the month of February 2021. Clearly identify any under or over absorption of fixed production overheads. So remember, we are trying to absorb £22,000 worth of overheads on a budgeted output of 5,000 units per month. So if our production is lower than that, we're going to end up with under-absorbed overheads. If it's higher than that, as it was in January, we'll end up with over-absorbed overheads. So in this case, it'll be 100 lots of £4.40 over-absorbed. In this case, in February, it's going to be 200 lots of £4.40 under-absorbed. So the income statement, obviously going to start with sales. Let's have a look at the figure there. Just shove that off to one side. So sales for February, 93,100. So we can pop that in up there. And then we want cost of sales. Okay, now opening inventory. We do have opening inventory in February. So if you remember, I said we produced 5,100 units and sold 4,500. So the inventory at the end of January is 600 units, which then becomes opening inventory for February. So 600 units. And we're valuing those units at £10.40. So that's the full production cost. That's the thing with absorption costing. We include the overheads. If we were doing it under marginal costing, it would just be on the direct cost. But it's everything when it's overhead absorption costing. So let's find out what 600 lots of £10. 600 lots of £10.40 is 6,240. So that's going to be our opening inventory up here. 6,240. Then we've got cost of production. So that's the number we produced. So in February, it was 4,800 times £10.40. So we got there, 4,800 times £10.40 is 49,920. And then we need to value the closing inventory. Oops. So we had 600 units in stock at the start. Okay, we made another 4,800, but we sold 4,900. So closing inventory in this question is 500 units times £10.40, which is £5,200. So we take that off. Okay, so we've got 6,240 plus 49,920 minus 5,200 is 50,960. And then we've got to work out the under absorption. So remember, we're trying to absorb £22,000 worth of overheads. We've actually only absorbed 4,800 times £4.40, which is the 4,800 times £4.40, which is, so we've absorbed 21,120, and we're aiming to absorb 22,000. So the under absorption, which we need to deduct as well, because it's going to be an extra cost, under absorption. So it's basically the 200 units times £4.40, which is £880. And then that's going to give us our profit, gross profit. So our profit then is going to be 93,100 minus 5960 minus 880 is 41,260. Okay, so there's 6 marks for that one. Just give you 6 marks